Good morning and welcome to NYSE Live. I'm Ashley Mastronardi. The major averages are fractionally higher this morning as chip stocks look to rebound and investors navigate the latest uncertainties in the Middle East. Over the weekend, Iran fired missiles at Israel, with Israel retaliating with strikes of its own. Earlier this morning, President Trump told both countries to, quote, immediately stop shooting, end quote, in a post on social media. It marks the first time Iran and Israel exchanged strikes since April's ceasefire agreement, and currently the price of ICE Brent crude oil is trading at $95 a barrel. And here's what else is on tap this hour. NYSE parent company Intercontinental Exchange just released the June Mortgage Monitor, examining key trends and developments across the mortgage and housing industries. ICE's head of mortgage and housing market research, Andy Walden, will join us to break it all down. Elsewhere, our Kristen Scholler was on the scene at the Possible Miami Marketing Conference and Expo earlier this spring. She spoke with key decision makers, including Morning Brew CEO Robert Dipple, who explained how the platform's unique blend is bringing to the market. And at 9:30 Eastern, NYSE-listed Colgate Palmolive celebrates its 220th anniversary of founding, as well as 40 years of its You Can Make a Difference Global Award program. But first up, joining me now is Andy Walden. He's the head of mortgage and housing market research. Andy, welcome.
Hey, good morning, Ashley. How are you?
Doing well. So good to have you back. So your latest report reveals equity withdrawals rose 2% year over year in Q1, in its reaching its highest first quarter level since 2021. What's behind the move?
Yeah, a couple of different things. One, the amount of equity to borrow against that homeowners are sitting on still sits near an all-time high. It's come about 1% off of its peak as home prices have settled a little bit, but still sitting on a significant volume of equity to lend on and to borrow against out there in the market. The second is that interest rates were down in the first quarter of this year, right? First lien rates touched below 6% there for a moment in late February. We also saw a second lien line of credit rates get down to 6.6%, their lowest level in a few years out there in the market. So that home equity became a little bit more attractive and a little bit more affordable to tap into as well.
And Andy, what else are homeowners who bought from 2020 to 2022, when we saw historically low mortgage rates, doing to take advantage?
Yeah, those folks are primarily looking into second lien lending opportunities, right? 3/4 of those folks are opting to tack on a second lien to their home, whether it's another loan or a line of credit onto their property, rather than giving up those low first lien rates. We've now seen about 3.9 million of those borrowers that took out their primary mortgages from 2020 to 22, when we were seeing those record low rates out there in the market, add a second lien to their home. 3.4 million have added it after their first lien was originated. And so I think that's something, as we look at it from an industry perspective, to be aware of, especially in terms of risk out there in the market, because some of those seconds that are added post first lien can be invisible to first lien servicers, RMBS investors, whole loan investors out there in the market. So identifying those liens early and the impact that they're having on performance becomes crucial there.
Right, you mentioned those second liens, and according to the Mortgage Monitor, the average second lien HELOC rates fell to 6.6% in March, their most attractive level since 2022. How much more demand is this fueling for home equity products?
Yeah, when we look at the first quarter of this year, it tends to ebb and flow seasonally, right? So the stronger volumes tend to come in the summer, Q2, Q3, with volumes falling off in Q4, Q1. But taking into consideration that seasonality, this was the largest Q1 second lien lending volume that we've seen in 18 years out there in the market. Now, we may be seeing those growth rates slow, and we are actually seeing those growth rates slow, but we may continue to see them slow for one primary reason. When you look at that rate, right, we mentioned 6.6% on second liens. That's very closely tied to what the Fed does out there in the market. And as we know, there's more and more discussion about the Fed holding pat, or maybe pushing interest rates up a little bit later this year. You've also seen those second lien lenders being very aggressive versus the underlying prime rate. So without going back to kind of negative spreads from 2004, 5, and 6, we may not be able to get much more aggressive with those second lien rate offerings. And so from a home affordability perspective, maybe you're reaching a floor there from a second lien rate offering perspective.
All right, and we're currently in what's considered the busiest time of year for home buying. What does affordability look like as we enter the summer?
Yeah, we've seen it take a little bit of a step back from where we were earlier this year, but when you compare affordability levels to where we were entering June of 2025, home buyers have about 3% more buying power than they did at this point last year. Last year rates were 6.7 to 6.9% at this point last year. So we're a quarter of a percent below that. You have about 3% more buying power than you did at this point last year. And when you look across the country, all 100 of the largest markets across the US are more affordable than they were at this point last year.
All right, and mortgage rates have gradually climbed higher over the past few months. What impact is that having, if any, on home buying or refinancing activity?
Yeah, from a refinance perspective, you're seeing it pause that activity a little bit from what we were seeing in the fourth quarter of last year and the first quarter of this year when mortgage rates got below 6.25. As I mentioned a moment ago, mortgage rates right now at about 6.5%. So it still makes sense for folks in the 7.25 to 7.5% range. But by and large, I would expect the refinance market to kind of revert back to where it was in the third quarter of last year, not only from a volume perspective, but also a makeup, right? It's going to be more heavily driven by equity extraction activity, more so than folks looking to improve their mortgage rate at this point.
All right, and we've covered the differences in home price growth across the U.S. in our previous conversations, but we understand it's become more broad now. Can you elaborate on that?
Yeah, I mean, the first thing we're seeing when it comes to home price growth overall, you're seeing a little bit of a pickup early this spring. So home price growth back up to about 1% year over year. Strongest that it's been since last August, but that's pretty neutral from a historical perspective, still pretty low. When you look across the country at the major markets and what they're seeing, 70% of markets are up from the same time last year, so firming up a little bit. And then when you look at the spectrum or the spread across markets, the high end is 6.5 to 7% growth right now. The low end is 3.5 to 4% declines. It's about an 11% spread from the high end of the market to the low end. That's one of the tightest dispersions we've seen over the last 35 years. So more mild home price growth and more kind of centered around relatively neutral and modest growth base.
And Andy, what else should homeowners and potential homeowners be mindful of when it comes to mortgage trends this summer?
Yeah, I think the key thing when we look at kind of demand heading into these more peak summer months, you are seeing a little bit more demand than what we were seeing at this time last year, about 6% growth. We're off of what we were in Q4, Q1 last year, modestly about 2% below those levels, but still up from the same time last year. I think when I look at it from a prospective home buyer's view heading into the summer months, a couple things stand out to me. One, you've seen a shift in who's shopping out there in the market. First-time home buyers, lower credit score buyers have been priced out a little bit more by this leg up in interest rates from 6 to 6.5 that we've seen over the last couple of months. So you're competing against a little bit more seasoned home buyers out there in the market. That being said, I think patience is kind of the word that I would throw out there this spring and summer. You're seeing more supply than we were seeing at this point last year, more affordability than we were seeing at this point last year. Buyers are seeing the upper hand in some markets out there, and they're using it to be a little bit more patient and shop a little bit more this spring and summer. So a little bit better position for prospective home buyers than we've been in over the last couple of years.
All right, thank you, Andy Walden, head of mortgage and housing market research. Thanks for joining us again, Andy.
You bet. Thanks, Ashley.
All right, coming up, Morning Brew was among companies at the Possible Miami Marketing Conference and Expo. You're going to want to hear what our CEO told our very own Kristen Scholler about its unique strategy next.
It means so much to stand here today on International Women's Day at the New York Stock Exchange. When I look around this room at the leaders, entrepreneurs, advocates, and change makers, I feel something powerful. True power isn't just building something for yourself. It's building something that lifts other women up. That's why I'm using this platform to highlight women-owned small businesses. Gloria once said that dreaming is a form of planning. I dreamed of building something of my own. Today, that dream has become a responsibility. Because the future of finance, leadership, and this economy is unapologetically female. I'm looking forward to ringing the bell and celebrating with you all afterward. Loves it.
We literally have changed the entire baby food industry. To all of these little kids who inspire us and make us want to build a better world, we're actually doing it.
You guys have been there since the very beginning. You deserve everything that happens today.
Welcome back to NYSE Live. Earlier this spring, industry leaders convened at the Possible Miami Marketing Conference and Expo to discuss the future of advertising and marketing. Our Kristen Scholler was on the scene and spoke with key decision makers, including Morning Brew CEO Robert Dipple. He explained what his brand is doing to stand out in a crowded market. Take a listen.
We're a unique blend of a media company that has both the consumer side where, from an audience perspective, we talk to people about decisions you would make in your personal life, from what you're investing to the sneakers you would buy. And then on the B2B side, we help you in whatever industry you operate. So if you're a marketer, we have Marketing Brew. If you're in the HR community, we have HR Brew. And that blend is really unique. While we operate that, we've also really diversified the channels that we go in. So newsletter is still a huge foundation of Morning Brew. It always will be. But the founders and the leaders before me really started to make a bet that multimedia would be a big deal, that social content, podcasts, audio, video, that bet has really paid off in the last 24 months. And the overall engagement of Morning Brew, actually the growth is majorly from those multimedia channels. So what means that now is we're a much more like holistic media company, both for our audience and for our advertiser base. Still working on it, but it's been really good momentum the last 2 years.
Flesh out that strategy more from an advertising perspective and a content creation view.
Advertisers, I think the number one thing that advertisers want is the ability to be nimble, to optimize. And if you're only doing one thing with one publisher, there's no room to do that. So one of the benefits that we can do is that we can work with you, whatever your objective is, and help you with newsletter. We can get you in front of live at events. We can get you on podcasts. We can do creator original videos and really like tell your story where the audience you want is. And that's ended up being a huge advantage for us. So diversity, optionality, and then having an audience that actually cares about you and wants to like wake up and choose to view you in those places is really, really important. So our audience is not just coming in via a search result. They're actually saying, I listen to Morning Brew Daily every single day, and I'm there. So that is both beneficial for the audience and for the advertisers. So our team has gotten, the sales team has gotten much more effective at building these like holistic campaigns. We don't try to just give one trick to every advertiser. We build custom things, which is hard, but we're good at it.
So you referenced the challenge, but obviously Morning Brew is skilled in that. And you've been in this role for about a year now. What would you describe as the special sauce when it comes to Morning Brew?
I think the number one thing, which I guess lots of media CEOs are probably saying the same thing, but I think for us it's very true, is our audience like is genuinely unique and they genuinely are loyal to Morning Brew. And that's not something that I built. I inherited it and I'm very, very fortunate. But we are building on top of that foundation, almost it's like it's the foundation of a house. And that audience credibility and loyalty basically gives us license to do a lot of different things. But that is like the main part of our secret sauce. In addition to that, I think we do not have any unhealthy dependency on revenue sources or channels with our audience. So we don't have any programmatic revenue. Everything we do is based upon direct relationships with both our advertisers or agencies and with our audience. That's a very healthy way to run media. And then lastly, one of the things we've really improved over the last, call it 3 years, is we have a performance-based culture. So we're not a overly toxic culture where, you know, everybody feels that there's so much pressure you can't operate, but we're motivated to win. We're motivated by numbers. We're very data-centric. And that kind of like balance of those things is the difference between being very successful or not. And media is a hard business. What we do is very, very difficult. That performance-based culture tends to make a lot of the difference. So I'd say those three are probably the biggest special sauce. And then the creator ecosystem that we built, I think is pretty unique and maybe something we could talk about more if you want. But that is also a big advantage.
Yeah. What would you say makes it unique?
A lot of media companies are still trying to figure out structurally how to work with creators. And there's probably no less than 50 panels at Possible talking about creators. And I think that we have not cracked it perfectly, but we've created an environment where creators can really flourish. And there's some basic things that make that possible. One, we invest in them early in their careers. We give them a place to kind of grow and we don't dictate what they have to be doing. They can really come up with their own formats, their own content. They can find a groove. And like Dan Toomey on our team, who has Good Work, is a great example. He's got 1.7 million YouTube followers now, huge following. Macy Gillum now has a show called Out There. These are people that grew up in the Morning Brew ecosystem and are now exceeding. We also are very fair with the economics, which I think we give people who are very creative the ability to profit off of what they're generating. They have skin in the game. So they feel supported by the infrastructure that Morning Brew has, but they also feel like they profit when we were able to monetize that. And it creates this very healthy relationship that I think hadn't totally been fleshed out before. So I think we're really good at that. And we also don't overextend. A lot of the talent that we have is kind of growing in their career. We're able to support them. And our stable of creators is probably around 20 total at different places, not 200. So we really manage them. We care about them, and they're a big part of our business.
I want to talk more about Brew Media Group and, of course, the corresponding acquisition. What more can you share?
When I got the CEO job, the first interview I did a year plus ago, I actually foreshadowed and was like, hey, I think Morning Brew is actually a bigger opportunity than people realize. Like, people who know us love us. There's still a lot of people who don't know us, frankly, and that's a challenge that we're working on every day. But our template, like what we do as a media company, is very, very healthy. And I think it's also where media is going, the personality-driven, direct relationships with your audience, healthy monetization. These are all things that are not rocket science, but we're doing a good job of them. And what I said when I got the job is if we do a good job of this for a while, I think it could be bigger. I think we could do acquisitions. I think we could take this template and grow it. And about a year later, we were able to do that. In between that, we were really improving as a business, but we were also building kind of a hypothesis of like what we would do for acquisitions and what the non-negotiables would be for the types of companies we would acquire. And they really mimic like what makes us special, which you already asked about. And then we went out and started to look at businesses that maybe could fit as a part of our company. Are they in industries that we really care about, that we're not in, that we should either build or potentially break into? Business industries. Do they have channels and capabilities that we want to go more into? Are there more creator groups that are doing things that are special and they're a little bit more scrappy than we can even be, but they do well in our house? So we kind of built this criteria, and we went out and looked at businesses, and then we found this beautiful company that I actually had experience with called BizNow. And it's the leading commercial real estate media and events company in the world. They do 400 live events a year, and they are the leader in an industry that we care about, which is real estate. So we were able to do that deal. Axel Springer was very supportive of this strategy of going out and finding these companies. And so simultaneously, Axel Springer acquired BizNow, and we launched Brew Media Group. The thesis with Brew Media Group is that BizNow is the first deal, but not the last. We're going to do many more deals. And we may also do some smaller stuff, like bring in creator groups, bring in individual creators to join our ecosystem. So it'll look like a lot of different things, and it will take years to develop. But that was the catalyst deal, was getting BizNow in.
Thanks, Robert Dipple and Kristen Scholler, for that interview. Coming up, AI and cloud efficiency startup Point5 just secured a $60 million boost to advance its initiatives. The firm's co-founder joins us next to share the details. Stay with us.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by Direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
Welcome back to NYSE Live. A short time ago, AI and cloud efficiency startup Point5 announced a $60 million Series B funding round. Joining me now is Gal Ben David. He is the Chief Product Officer at Point5. Gal, welcome.
Thank you very much. Good morning.
Good morning. So how will you be putting the fresh funding to work?
I'll be honest, it wasn't easy. So for the past 3 years, we've been working pretty hard in this industry. It wasn't easy. We've built an amazing product that helps many big companies to save money. And we're looking for the best VC in the world for the B round. And happily, we could have landed the Axel at the end.
How is your product helping companies? What is it doing?
That's a very good question. So Point5 helps big organizations to save money on their cloud expense. It's a very big problem these days. Every big company, every product that we use eventually use a huge portion of cloud spend. And it's not easy for companies to be positive ROI and to be very efficient with how they use the cloud environment. So Point5 helps those organizations to spot many inefficiencies, many problems in the cloud environment. And nowadays, with the AI on the rise and what we've heard so many times in the news lately, how companies are spending endless money on AI, not knowing if this investment even pays off, it becomes even more urgent. So Point5 not only now helps companies to save on cloud spend, but also on AI spend. Yep.
All right, and I understand the Series B comes on the heels of a 6-fold growth in ARR between 2024 and 2025. In what areas have you seen the most pronounced growth?
I think the most pronounced growth comes from companies that leverage AI every single place. So companies that spend on AI eventually translate to spending on cloud. And this growth came from those American companies, big enterprises such as Nubank, for example, or Hertz, and many others, that could see pretty good benefit of using Point5 and big money savings, sometimes even 10 times the platform costs.
All right, and what's next for Point5? Where do you go from here?
I think this was the theme of the B round that we've raised, the AI. You're probably hearing this all the time. So we've decided to launch 2 new products today. One is the AI Efficiency OS. Point5 basically transitioned from being a point solution that helps companies to save on their cloud expense to a solution that actually let customers to build their own AI efficiency platform. As you know, many platforms these days that leverage AI as part of their product wants to do that their way. This is what AI really unlocks for many organizations and people. So the AI Efficiency OS that we've launched basically gives our customers the ability to build their own platform the way that they want it to be built. And eventually it helps them to save more money, to become more efficient, and to be on top of their AI spend. And the second product is TokenShift. We are launching today a pretty awesome product, TokenShift, which helps many engineers and organizations to save money on their agents. So as you know, you've probably heard about Claude and Codex from OpenAI. Those products help those organizations, every organization in the world, and every developer these days in the world to develop faster using AI agents. TokenShift helps them to save more money, helps their managers to be more visible to their use cases, to their use, and eventually helps organizations become even more efficient, more aware of their AI investment. This is a huge pain these days. And we've decided to weigh in even more than before.
All right, thanks, Gal Ben David, Chief Product Officer at Point5, and congratulations.
Thank you very much. Have a good day.
In just a few minutes, Colgate is going to ring the opening bell. And while that's generating plenty of buzz, there's some extra excitement here in New York City. That is because the Knicks will be hosting an NBA's final game for the first time since 1999 tonight when they take on the Spurs in Game 3. Earlier this year, several former Knicks greats rang the bell at the NYSE to celebrate the franchise's homecoming weekend. Let's take you back to that moment. Don't go anywhere. Colgate rings the opening bell. When we come back, there they are, out on the podium.
"16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto.
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream. And that's why it will be a successful company that delights the world with unbelievable products.
Welcome back to NYSE Live. In just a moment, NYSE-listed Colgate-Palmolive will ring the opening bell to celebrate a pair of milestones. The consumer goods company is on hand to celebrate its 220th anniversary of founding. In fact, its history stretches nearly a century with the New York Stock Exchange, with shares beginning trade way back in 1930. Colgate is also spotlighting 40 years of its You Can Make a Difference Global Awards program. The initiative is the company's highest honor for individual and team excellence, celebrating businesses driving success. Colgate-Palmolive celebrating its 220th anniversary of founding and its 40 years of its You Can Make a Difference Global Awards program. There they are taking a look back photo. That is a photo that happens after the bell that captures the entire floor. An exciting morning for Colgate-Palmolive, and the New York Stock Exchange is open for trading. And joining me now is John Hilsenrath. He is the senior advisor at StoneX. John, welcome to the New York Stock Exchange. Our first time speaking.
Yeah, it's great to be here and seeing Colgate-Palmolive. I'm going to go out and get some tooth whitener.
Yes, I know. I was thinking, I was like, I used Colgate toothpaste this morning. So markets open. What storylines will you be watching most closely as trading gets underway?
Oh, well, I mean, the big story is the market going to recover after Friday's sell-off? And the narrative here, it's a little ironic, but it turns out like the economy is running stronger and hotter than I think a lot of investors appreciated a few months ago. The good news is that's growth and that's jobs. We had a strong jobs report on Friday. The bad news is it might provoke the Federal Reserve to raise interest rates somewhere down the line. And so I think the market is internalizing this cost of capital question. Are we going to get higher rates? And so we had a bump on Friday. My own view is because the economy is running so hot right now that there's still a lot of earnings momentum in this market. I do think the Fed has to get to work to slow inflation down, and they cut rates too much last year. We've got something else to look out for, an inflation report coming out Wednesday that I think is going to have a big impact on the market. But it's the rate debate, and that's really what took center stage on Friday.
We've been hearing about cuts, and then a few months ago we started hearing they might hike rates, especially if the conflict in Iran goes on.
Yeah.
What are the impacts of a rate hike versus a rate cut? Everybody has a different opinion.
Yeah.
What is your take?
Well, I mean, first of all, in terms of the cuts, like to me that whole conversation looked off because the Fed, the inflation rate has been over the Fed's 2% target for more than 5 years now. I mean, it would seem to be a strange act to keep cutting rates when the Fed has inflation, can't get inflation down to its target. The traditional thing you do when inflation is too high is you raise rates to restrain demand a little bit, and that rebalances supply and demand in the economy, and inflation comes down. So the conversation to raising, the reason we've gone from cut to maybe raise is because it looks like the economy is running pretty strong, and the Fed is going to have to do something to rebalance the economy. For the stock market, the challenge is, on the one hand, growth is good. Growth is great, right? On the other hand, investors like the jobs report and all of that, creation of jobs. But the cost of capital is fundamental to valuation. And if the Fed starts raising interest rates, that's going to raise the cost of capital, which lowers stock valuations, and so the market is kind of rebalancing the earnings story with the cost of capital story, and we'll see where they land.
We're coming up on the Fed decision later this month.
Yeah.
Kevin Warsh, obviously his first in that position. What do you think the biggest challenges he's facing are? Oh
boy, he faces a lot of challenges because on almost every front. First, getting back to your point about cut, the president of the United States has been saying cut for years, and the president of the United States is the person who gave Kevin Warsh the job, right? So there's a lot of political pressure for him, not only, certainly to not raise rates. I think the president, Kevin Warsh, will hear about it if he comes in and raises interest rates. He'll hear about it from the president. So that's one challenge, is the political pressure. Then he's got a committee of Fed officials, 18 different people who have different views about how the economy is doing, about the inflation outlook, and he's got the Fed is not an autocracy. It's a consensus-driven institution. He's got to get everybody on board to make a decision together. And then, so there's an internal dynamic that he faces challenges with. And then there's the economy. There's, on the one hand, we have war, which has driven up oil prices. On the other hand, we have an AI boom, which is driving growth and driving some hiring, but also pushing up the cost of energy. So he has a really, really challenging environment that he's walking into. And I will note, this marketplace behind us, the markets very often challenge new Fed chairs when they come into power. Ben Bernanke got a financial crisis a year and a half after he became the Fed, less after he became Fed chair. Alan Greenspan had sell-offs after he became Fed chair. So I think the market is going to start testing this new chair's mettle. It's going to be a really interesting time to watch.
We're going to see some inflation data dropping later this week. Do you think it's going to have an impact on the next Fed decision? And how much does the Fed weigh these different data points, all of this like economic data that comes out?
Well, it really has impact on the Fed decision because we've seen a number of regional Fed bank presidents and Fed governors saying that they're losing patience with this expectation that inflation was going to come back down to their 2% target. You know, a number of them have said, the Philly Fed president said that, you know, she's only got a few more months before she starts thinking, all right, we've got to do something to get inflation down. So these CPI numbers that come out on Wednesday for the month of May, I think will be important. And what I expect to see, given the increases that we've already seen and what happened in the month of May with gasoline prices, is we're going to have a headline CPI number close to 4%, twice the rate that the Fed is targeting. So the pressure is mounting. I think in the second half of the year, the pressure builds for the Fed to raise rates, and that's going to be a potential challenge for this market to keep the bull market going.
All right, John Hilsenrath, Senior Advisor at StoneX. Thank you so much for joining us at the New York Stock Exchange. Still to come, a new study shines a light on how tax firms are gravitating toward AI adoption, and the numbers may surprise you. Blue Jay CEO Benjamin Allery will take us through that report. Meanwhile, the NYSE was on the ground at Money 2020 Europe last week, speaking with fintech leaders shaping the future of the industry. That includes Money 2020 President Tracy Davies, who explained how agentic AI is revolutionizing finance. And with the FIFA World Cup kicking off later this week, I'm going to speak with Sean Cunningham. He is the CEO of the Video Advertising Bureau about how companies are preparing for the global event. Stick around.
I'm just so honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back to NYSE Live. Earlier this morning, Blue Jay and CPA.com released a new study titled the 2026 AI Tax Research Solution Outlook Report. It examines how accounting firms are shifting from trying AI to relying on it. And joining me now to break down the results and explain what it means for the future of the profession is Benjamin Allery, co-founder and CEO of Blue Jay. Benjamin, welcome.
Thanks. It's great to be here.
All right, so great to have you. So what are the biggest takeaways from this report, and what does the report cover?
So the report covers the future of AI in tax, and it does it from the perspective of where are things today. And the big takeaway from this report is, building on our first report of last year, is that the adoption of AI for tax research has essentially doubled over the past year. A year ago, it was at 33%. It's now at 60% adoption by tax professionals, and a further 32% expect that they will be adopting it over the course of the next year. So Ashley, it's like 92% of firms either already have adopted AI for tax research in their work or they're about to. And so this shows a really big sea change in the adoption of the technology. It's no longer a question about when is this going to be adopted. The when is now.
How are firms warming up to it?
I think what's amazing is folks are using it in their day-to-day work already. So I mentioned 60% of firms are already doing it. Another 32% are going to be adopting it soon. Fully 80% of tax professionals are using AI in their day-to-day work right now. And what that means is it's extremely useful for the work that they are doing day in and day out. It's no longer a novelty or a question about whether this technology someday is going to be relevant. It's relevant today. And people are having fantastic experiences leveraging AI for something as technical as tax research. It can save them a huge amount of time. 77% of the respondents to the survey indicated that using AI for their tax work is saving them substantial amounts of time that they're able to dedicate back into servicing their clients with the sorts of judgments that they alone can make as tax professionals.
What kinds of tasks is the AI automating in this realm?
This survey, this report is all about tax research. And tax research, I come at this as a tax law professor and started Blue Jay as a tax law professor. I'm very familiar with the pain associated with doing technical tax research. There's so many different sources that you need to look to in order to come up with a confident opinion and make sure that you're covering off all of the technical bases. Tax research is one of the very best areas to leverage AI for professional work, and we see it in the results of this survey, which we report beginning today. Tax research used to take many hours to get right in a lot of circumstances, and with AI, that's telescoping down into minutes of professional effort.
Right, and we understand you believe this is a story of professional elevation and not displacement. Can you break that down for us?
Yeah, absolutely. I think the core story is that tax professionals are able to leverage their judgment in a way that's much faster than they ever would have been able to before. So this really accelerates the process of compiling all the relevant documentation, puzzling through the interactions of the case law and the statute and regulations, and finding competing views potentially from IRS administrative materials, rulings, reading professional commentary. All of the above can be brought to bear almost immediately with the help of AI to assist the professional in coming up with an informed tax opinion. So it's about accelerating that moment to judgment and enabling really sophisticated tax advisory work in a way that just was never before possible.
And in our last few seconds together, we do have to wrap. How much time is this saving tax professionals? Can you quantify it?
There are different ways to estimate the amount of time. Based on a broad sample of interactions that we've had with our customers, the estimate that we're arriving at is around 3 hours per week per tax professional, which is fairly substantial, high single-digit percentage-wise of the amount of time that tax professionals are active.
All right, Benjamin Allery, co-founder and CEO of Blue Jay, thank you for joining us at the New York Stock Exchange.
Thanks so much, Ashley.
In other news, the NYSE was on the scene at Money 2020 Europe in Amsterdam last week, where leaders from across finance gathered to chart the future of money. Money 2020 President Tracy Davies said much of the conversation revolved around two themes, agentic AI and stablecoins. Here's what else she had to say to Anastasia Kinski.
There was a lot of talk, let's be clear, about AI, but it definitely hadn't gone full agentic. Yeah. And so I think that has been the thing. And stablecoin, a lot more use cases. And I think that's the thing. There was a lot of conversation last year, but I think you're seeing real use cases, a lot more conversation, and also divergence of opinion. Not everyone is stablecoin-tastic. There are different views emerging, quite strong views. And you start to see that as a topic and a technology moves more into the practical applications, I guess.
And that's what's so wonderful about events like these. You get those conversations really fleshed out rather than just the headline hype. Like, let's really get into this fully fledged debate.
Well, that is our goal, that we go beyond the hype. And I think that's really important for people who, want to learn and want to know what's going on. But you have to get beyond the hype. And we have had the hype phase in AI and stablecoin and digital asset, definitely, as we've had with other things before. This is an industry that keeps changing. But yes, you have to get beyond the hype.
Part of that progress phase. And speaking of progress, you previously had mentioned this wonderful term, which is that we're moving from AI integration to delegation. What does that really mean for reshaping finance?
Well, I think what you're seeing now with AI is, it's hard not to talk about AI without agentic, because obviously the whole, you've had this sort of exploration stage and now you're in this sort of agentic and autonomous. It's like 50% of all tokens are now agentic, not human to chatbot, but agent to agent. Right. And I think that's been the big shift this year.
Yeah.
Now, of course, not everybody is at that frontier stage. There's still a lot of people researching and exploring. If we have those phases, we're researching, we're exploring, maybe we're piloting versus a full rollout. But you've only got to look at some of the numbers, some of the big banks, how many AI programs they've got, and what is happening in the big enterprise apps, how many of those AI features, it really is being rolled out. It has moved. There are different speeds, but we are in practical application.
And I think that's what's so fascinating is that it won't be looked at in history books as very long at all, but for the last couple of years, plenty of murmurings, and then actually it happens all at once.
Yeah.
And to that kind of tipping point, point about AI, do you think that we can say the same about stablecoins? And especially just maybe the role that they play beyond the crypto space into the rest of finance?
I think, are we at a tipping point? I think it depends where you are. It really depends on different countries. There's been, if you look at some of the, like the Latin American countries, you look at Argentina and you look at the adoption of stablecoin, for reasons that we know, right, where you have instability of currency, there is a lot of adoption.
Yeah.
It was interesting when we awarded our first Money 2020 awards in Vegas last October, that Yellow Card, a African fintech enabling cross-border payments in Africa using stablecoin.
Yes.
So I think it depends where you are. Asia, we see, big adoption. Is that touching the lives of the average consumer yet in, say, the UK, Europe, the US? No.
Yeah.
But, we are seeing massive coverage of it in the industry. And obviously, so, it is the big trend. It is here to stay. If you think about moving money across border, we all know it's really hard. And stablecoin is enabling, quicker, more cost effective. Now, not everyone agrees. And that's the thing
that's part of the conversation.
We like. I was sitting with someone last night and, they're firmly of the view that stablecoins is not the way the industry goes. But that's what makes this industry so fascinating, is the different opinions. And, I was just talking to Unipay, based out of Colombia, and talking about what's happening in their market. And you do see real adoption. So I think we're at different speeds in different places.
And I think to your point there, and it's the same for AI across the board, when we say progress, do we mean has it changed the status quo? Or do we mean has it filled gaps that were otherwise unfillable by either traditional finance or fintech as it was? And that's an important shift in our conversation, because, like you say, what Yellow Card is doing is not to be dismissed. This is untapped value.
Yeah, and won the Grand Prix of the whole payments category at the first Money 2020 Awards. So, that was interesting itself. But I think with, of course there are different speeds. We know the use cases around fraud and, et cetera, et cetera. But, look, AI is a technology changing many industries, and everyone's trying to work out, what is the use case? Where can it be applied? There's obviously a lot of hype.
Yeah.
We see that in terms of replacement of jobs, and is that, and I was talking to someone last night and they were like, we've adopted AI massively. We've not lost a single job. Then you have, so of course we're in an emerging phase of this technology, and that is going to carry on for some time. Has AI got massive benefits for the financial services industry? Absolutely. There is no doubt.
Thanks, Tracy Davies and Anastasia Kinski, for that interview. And coming up, the FIFA World Cup begins on Thursday, but it's not only the 48 clubs competing looking to win. We're going to dive into how advertisers are looking to win during the upcoming global event up next.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. We've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. Everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly, it is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
Welcome back to NYSE Live. The Video Advertising Bureau represents and advocates for the entire video advertising ecosystem. And with a packed slate of tentpole events this summer, including the FIFA World Cup, the industry is in overdrive. And joining me now to break down the opportunities around these major moments and what they mean for advertisers is Sean Cunningham, President and CEO of the Video Advertising Bureau. Sean, welcome.
Thank you, Ashley. Appreciate it.
All right, what opportunity does the World Cup event have? It's a huge event coming up.
I'd say there's four. The first is scale, all right, and you mentioned 48 nations, 5 weeks, 16 venues, and inside of that we're expecting an audience of roughly 64 million viewers, right? And if you think about that from a demographic perspective, that is a third of the 18 to 44 population, incredibly important population for advertisers. So scale's the obvious one. Second is passion, connectivity, and having a visceral connection to the content. 84% of the people who are going to watch say that they have an extremely strong emotional connection to their host, to their team. And the thing that's interesting, too, is 66% of all viewers say that they'll be rooting for a second team as well, a second nation. So there's literally twice as much opportunity with most of these people to have a visual connection. The third is communal, and that is this event, not only very strong on primary screen, but 44% of the viewers say they intend to watch with friends and family. Another 44 say they intend to watch it in bars and restaurants. From an out-of-home perspective, that's nearly unprecedented. A Super Bowl gets maybe 27% out-of-home viewership. An NFL weekend game, 17. but the World Cup will be 44, so communal. The fourth opportunity is cross-screen, and we believe that roughly 70% of the viewers are going to be two-screening, are going to be literally watching on a big screen while they hold a second screen. And the marketer opportunity is what they're doing when you have that second screen. A lot of it is browsing for products, checking for features. So there is literally a commerce ability to this as well. So community, commerce, scale, it's a terrific event.
And this is being hosted on a large stage in North America, the United States, Canada, and Mexico, all hosting games. What will this do for advertisers, like being on such a large stage?
It's an opportunity to get something that is, almost Olympic size. It's about half the size of the Olympics when you think about it in terms of a multi-day event. And to have something of that size, that duration. But I think the real killer app here is the passion. There's so few things that viewers are connected as tightly as U.S. soccer fans are to watching the World Cup. And, it is the world's game, and it is, among the most personal for-country events that somebody can buy into. So I think that emotional connectivity is something that, is in good supply in sports, but in short supply everywhere else. And this is the top of the pyramid in terms of emotional connectivity, I believe.
All right, and looking at sports more broadly, there's so much going on, especially with the NBA Finals. We were just talking about that.
Right.
Super exciting.
Right.
We have the WNBA season, the Stanley Cup, the recently concluded French Open. What opportunities does live sports programming play in today's video landscape?
They're the apex opportunities. They really are. I mean, the expression, you can't make this up. It's the ultimate in unscripted drama. Right? And you can't look away. I defy anyone to have looked away during the last 4 possessions of the most recent Knick game. Tonight's game at Madison Square Garden will be an absolute spectacle, the ultimate in must-see TV. And the same goes for tomorrow night's game, out in Las Vegas. The things that this does is this puts sports firmly at the top of what's called linear TV, as opposed to streaming. And what you've got there is, for example, last September and October, we got the NFL accounted for 48 of the top rated shows on television. So it's apex audience, apex connectivity.
Sean Cunningham, CEO and President of the Video Advertising Bureau, thank you so much for joining us. That is going to do it for us here on NYSE Live. Happy Knicks Day.
Welcome to the public market.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. I'm so proud of you, every one of you. You work so hard to make so many people happy, and you make your communities better. What more could you ask for?